Hey guys, MartyBoots here. Today I want to do a deep dive on Bitcoin to assess what is happening, to assess if we have a top in, to assess, what to look for, what happened in the past, and little things we can pick up on to potentially give us some clues of what is actually happening here. Okay, this is the index chart. It is it's all the data from Bitcoin history back to 2009, or where's the data? Yes, 2009. Okay, so we're just going to start with that, and we're going to look through it all. We're going to look through multiple time frames. We're going to look through different indicators, and we're going to try and assess, what is happening. So, first off, I just want to point out very, very, very quickly here, just one little nuance. Okay, we can notice right now. Now, this can change, of course, but as of right now, you can see that this white moving average here is it's a white 100 moving average. Now that is underneath price. Okay, I just want to just as a starting point, we'll just look at that, and you can see that this is coming down and coming underneath price. Now, when it is under price, it's usually a decent sign of strength. Okay, a couple of things I want to point out is we will look at, here you got below it and you had this bear move. You got below it here, you had the bear market. You got below it here, you had the bear move. Okay, let's look back throughout history and see this. Now here again, we got below it here, we had the bear move. Okay, of course this is the COVID crash. I suppose we got below it there and we dropped. Okay, but look here again. It's when, I know it did drop quite substantially into that, but when we got below it, we had the bear market, right? Now let's go back and we'll check every single bear market or drop in history. Okay, now here again, right? Yes, there was substantial drop in volatility and a bounce back up, but then when you got below it here, as you can see right there, I'll just put that in there, you can see that the bear market had started. Okay, that was the time to be cautious. That was the time it was all over, right? So this one, what do you want me to say about that? It's definitely a different situation. There is no one size fits all, but we got below it here and there's a substantial drop there as well. But obviously, that was crazy action from what's that? From $10 basically to $260, right? It was crazy. But look again, look at this one. When, yes, there was that blow off top. Now, obviously, we need to be looking for blow off tops. We know Bitcoin is prone to that, but we broke that white moving average, and you can see that drop right there, back there. Now, that is basically all the data we have in all of the bear markets, right? I just want to go in here just to be sure. Yeah, it just started there. Yeah, there's nothing there. Now, things to look out for, right? Parabolic move, parabolic advance, parabolic advance, right? Parabolic advance means pullback. Parabolic advance, pullback. All right, let's check them all. Parabolic advance, I've already marked it there, and then that's the top, and there's a pullback. Let's go to the next one. There was a parabolic advance here of some sort, and then it crashed down, and we went into consolidation. Okay, so there was something there also. Now, this is also a parabolic advance, wherever you want to draw that from, maybe from there right through, and then you get that drop, okay, and then you get the long sideways action. Okay, it happened over and over and over again. Now, this is 2013. Of course, this is a parabolic advance. If I zoom in again closer, well, you can see that the parabolic advance started from here, and it absolutely just went parabolic. And there was a couple of things that happened along the way. There was a drop and the kind of recovery there, but it was a parabolic advance, and what it led to was a bear market, right? Same thing again. So when the volume, I'm on the index here, the volume's not great there. Anyway, so there's been parabolic advances in every bull market so far, right? No, it's not always going to happen, but here's the parabolic advance here, right? We got it there in 2017. I'm sure a lot of people still trading remember that. Okay, there's one there. You could say that there's a miniature parabolic advance here when you broke out of this consolidation range and we formed that. Okay, bit of a parabolic advance, and then price did drop pretty hard. Okay, down into COVID crash. If we actually look at that, it was a 72% drop in Bitcoin. So I'll just clean up this chart a little bit. I know it's a little bit messy. I probably should have cleaned it up a little bit before, but there's no question about it here. There is some sort of a parabolic advance in here, or is the whole thing a bit of a parabolic advance? Whatever way you want to look at it. Of course, then there was a retest here, the stop punt, the deviation, the failure, and then we crashed. Okay, now we do not have number one, we don't have that white moving average over the top of price, was the first thing we pointed out. The second thing is we don't have a parabolic advance yet. Every single bull market or move in history of Bitcoin so far, back to its inception date of 2009, there has been a parabolic advance. Now, these are not parabolic advances, right? They're not really characteristic of it. They're more, they're not really straight up. They're more angled. They're more, there's many different, is this the right thing? Yeah, that was the right thing actually. But they're more. It's more of a rising pattern, whatever way you want to draw that. But it's more slanted. Of course, the other ones were definitely steeper. I didn't draw them correctly at all. I should have drew it on the other side. Would have got it better. But you get what I mean. Could it still top out? Of course it could. And that's what we want to look into today. We want to look into some further evidence. Because there's no question about it, there's similarities to this move, and then you get an M pattern, you get a double top. There's a double top right here, right? So that's the worry in the market right now, that we are kind of forming something similar to here. Of course, there's massive institutional investment all over the planet. There's a new $1.2 billion buy, or at least they're going to buy, of Bitcoin from a Norwegian company this morning. That's another 1.2 billion. Now, last night, the White House came out and said that they are in the middle of forming an accumulation plan for Bitcoin, for a strategic reserve. They've already put the first allocation of 200,000 or whatever that was. So they have an accumulation plan going forward. A representative or whatever, came out last night and said that as well. So that might be another 800,000 buys of Bitcoin, an accumulation plan. So, are they going to dump the price, before, so they can accumulate down here? We don't know yet, but they do. The White House, the US government, do plan on buying Bitcoin. So if they plan on buying Bitcoin, there's many, many other companies and countries are all going to try and buy before them. Because why wouldn't you try and front run? That's what you do when you're using the order book sometimes. Just for example, actually, I can show you today's order book. This is today's order book, and a good example of it. There's a lot of orders up around 108, 109K, and even goes up to 1092. But an example of that is people will want to front run that and potentially short in and around here, right? They'll start shorting here because there's a lot of orders and resistance above it. So you want to front run that and then potentially capture the drop. So basically the opposite may be happening when all these companies are trying to buy before America. If America are going to buy a million Bitcoin, they're going to front run that and attempt to get in before all that buying starts. So the truth is, maybe when the American government buy, that could be a top in the market, because when they buy, maybe nobody else will be left to buy because they've already put out the news that they're going to buy, and then everybody wants to buy. It's a little bit like Apple. I remember back in 2012. Anyway, I'm sorry, I'm getting sidetracked here right now, but it's quite important because we're talking about tops in the market here. I remember trading Apple back in 2012. Where are we now? They done stock splits and stuff, so it may not be the same, but it's here. Yeah. I remember now, 13. Anyway, there was big news came out in here, blah blah, about the new phone came out, but Apple started to go parabolic. I remember it very well. Maybe it was the second move. I forget now where I remember talking about it and trying to trade it higher. But basically, they were releasing a new iPhone here. I'm nearly sure it was here, right? You can check back the date. It was either here or here, but I think it was here. Now, what happened was that everybody knew back here that this was going to be a launch date into the end of the year, right? That's September, right? That's down here in September. So end of the year was the launch date, right? Everybody knew at the end of 2012 there's going to be a new iPhone, and it's the best iPhone ever to come with. It had huge updates, and they were promoting it a lot, and they were absolutely pumping it. And Apple was just taking off. There were, look at the craze. Like, look what happened. There was the craze of the iPhone was. I'm not saying just starting. Of course, it wasn't just starting, but they were really taking over, and they really promoted this and pumped this because it was a new product and whatever. It was such an improved product. But when it came out, almost the day it came out, the market topped, right? Because everybody knew from back here when it was going to come out. It was coming out at the end of the year. So they were all buying it here, buying it here, buying it here, and the market went parabolic. And then eventually on the news, buy the rumor down here, sell the news up there. Now, I say that because Bitcoin and the American government could be the same. There's 44% drop, okay? So we'll go back to the time index here because it's got more data. But anyway, so the American government, they have been telling us, is it since back here? Where's that? No, actually, it's probably not back there. It's March. Maybe it's down here. So maybe it's down there. So the American government have been telling us here. So the market is continuing to go higher. Wherever it is, whenever maybe they finish buying, there's a possibility that will be the major top. I just wanted to stress that theory and that point that the American government could actually be the topping signal for the entire market, because everybody knows about it and everybody else wants to buy in before them. Okay, so there's definitely some validity to that. Need to watch that carefully. An indicator I want to talk about here is sorry, I'm on the wrong time frame here, is our very powerful strength candles. Okay, now it's not perfect, but it is very good for finding bull and bear markets. We can check it there. It's very, very powerful. You can check it on. Sorry, I'm on the wrong time frame there. I meant to check it on the weekly, but you can see just when it starts, and it'll work on. I can go to the monthly, and we can assess it there as well. Monthly is obviously a bigger time frame. It's capturing the longer term trend, so it's going to be mostly green. But we want to kind of break it down and get a better visual of nearer term trends at least. So, we can look here. You can see it captures the bull market, right? It captures the bull market. It stays in bullish conditions. It starts to flip red right there. And then it captures that entire down move. It starts to flip here, but very quickly it gets you back in the market here and rides that up. And then obviously it starts to flip red in there. Bit of choppiness, but then obviously it captures most of that move, okay? And the same in the bull market. There's a lot of chopping through here, and then it starts flipping green and captures the main move. We'll go through and chop it here, it captures the main move. But what I want to show is we are still very strong here, right? There's no weakness in the market. It's still showing strength. Now, these are very, very powerful candles. This is it's one of our own personal tools in our live Discord. We have a group of fantastic members in there, but we also have a lot of powerful tools, and we are in the process of finishing our most powerful tool yet that we are going to be releasing very, very soon. But anyway, if you want access to some of these, come on and check us out, and we can get you access to them. You can see here, it captures down here, it starts to flip green here a little bit, and then obviously it breaks up and runs there, captures that move. I mean, we can do it throughout history and kind of assess what happens. It captures all of these bull markets, right? And it kind of keeps you in the trend. I'm not saying you should trade solely on this, but it can give you a good guidance of when the market is very strong or is very weak. And it captures most of that bear market as well. You can see it captures all this bull market. Look at all the bull market as well, still in that as well. And it captures most of the bear market. Now, if you wanted to capture and refine it down and have this all red, you could go down to the daily chart, right? Flip it down to smaller time frames, and it will give you quicker signals. Okay, so that's something else to do, and that's the end of it there. So that's a very powerful tool there. That is why I'm showing that is because it is still showing that we are bullish. Now, this is a different indicator. This is our trend finder. And as you can see here, it is very, very powerful in finding trends. You know, it captures the bull run here, gets you out in here, captures a lot of that as well. It's in this chop here. But so purple is when you're very bearish, right? Purple is when you're very bearish. And golden, of course, is when you're very bullish. Okay, so you can see that this indicator also is our trend finder indicator, and this is still showing very, very good strength. Now we can go back and have a look at past bull markets and stuff. You know, look at that for a trend. It gets you in extremely early, and this works on all assets. It works on stocks, forex, obviously crypto, altcoins. It works everywhere. Okay, so you can see here, you know, captures this trend here, captures this. Captures most of the bear market. Now, you can adjust the settings on it also. Sorry, up here. You can adjust the settings on it also. And yeah. So this back to 2011, 12, you can see, you know, it's been working throughout history, and it's very, very, very powerful, right? So you can see we are still bullish, right? There's no sell sign yet. Now, the next tool can often be one of the most powerful tools, trading tools that I've ever seen. It is our sentiment tool. It is extremely, extremely important and very, very powerful. Now, there is different settings on it, so it can and needs to be adjusted accordingly. It depends if you want fast signals, if you want longer trend signals. You know, here, for example, this is set on. Sometimes I can put that down to 20 if I'm looking for faster signals. I can just show you just right now, just for the sake of it. Okay, so you can see it gets faster signals right there. But for the video, I'm just going to keep it more of a medium, just as an example. And this is 65, and this is 100. Okay, 100. Oh, it's 150. Okay, yeah. So you can see here, obviously, when it flips green, you know, that's when you want to buy. Right, that's what you're looking for, and that's the trend. And you stay, and especially if you see this increasing, you want to be staying. So, but once you see this starting to drop, right, you can see it's already dropped a lot here. Well, you can be starting to take profits here because you are now seeing a bit of a bearish divergence forming, and this is, you know, it's equal here, but it's dropping here, and you can be taking profits. You can see here, obviously, you see it flipping green. A little bit of sporadicness here, but you can see that it's already green here. So the larger trend is not red. The larger trend is green. It's suggesting the trend is still strong, meaning these are dips, and these dips are for buying opportunities. So when this starts to flip green again, you can buy that and trade that higher, okay? And this also, I mean, it's a short signal, but obviously the market done nothing. So this was a great signal. It kept you out of the market, even though the market did drop. As an example here, we can keep going. Where is this tool? Okay, so you can see obviously here, you know, the market is very choppy, but it starts to flip green here. Well, what happens? This catches basically the start of the very trend, right? It's very, very powerful. And how do you know as well? Because this is your larger trend, right? The larger number gives you the larger trend. If the larger trend is still green, it means that these dips are dips in the market. I said that wrong. Dips in the bull market. It dips in the bull trend. So if these are only dips, well, you wait until this flips green again, because this trend is saying it's a bullish trend. These are only dips in bull markets. So when they start flipping green again, you get long on that, and away you go. You can see that time and time and time again. So obviously at the top of the bear market, up here, I mean, you can see here it started to flip red. Well, it got red right in here, and then captured that. Red, it started to flip green in here, but these, as I said, I can turn that down to 20 and capture earlier signals. It probably would have caught in here somewhere, right? But in this example, it is saying in here, it's starting to flip bullish, and it caught that trend higher, all right? There was, see this, how did we know it was going to bounce there? This trend was still green, right? This was still green. Now, all of them started flipping here. That was when the bear trend started. You can see that this trend is then bearish on your larger trend. So this is a bear trend. These bounces were still red, meaning this is these are bearish bounces. So when this flips red again, it's a short signal to short the market, and it's extremely powerful. right? Very, very powerful. You can see here, obviously, this is look at their larger trend. Even from back here, COVID was in that, but it said that COVID dip was a buy, right? It flashed, and when you flip green again, right down here on COVID, it's saying that that was the buy, right? And even here, as soon as you started coming out of COVID, it suggested that this trend was still bullish. The bear market this was the bull market. This was a dip in the bull market. It's basically a liquidity grab, and you can see the move higher, move higher, move higher. So, and I'm showing through the indicator to show how impressive and how important it can be. Look at the bear market here. Let's go into that. In here it started to flip red in here before the breakdown, and it told you the market was bearish. It told you when to buy in down in here on the very bottom. It was telling you to get long down in here. I was telling you, well, obviously, this flipped red and it dropped. This was very choppy right on here. Again, I need to drop that down to smaller time frames. If I went to the daily chart and went to a smaller number than 35 down to 20, this would catch up closer to the top. It catches right up here and then drops down. Catches the bull market and reading it, but you can see how powerful it is. So it captures, and even back here in whatever year that was, you can see captures the bull move. And look at the drop on that. So when it's dropping sharply like that, obviously you got to be careful. You want to see it rising. If you're trading this and it's still rising, great. If you see it dropping very hard and all, you got to be more careful, of course. And then you obviously seen it red on here, starts to flip red. These are it's later flipping red here, but it's still in here, which is in this choppy zone. But obviously you caught that drop. But the warning sign was right up in here, right? Look right there, and here was a warning zone and caught the bear market. So I only show you that too. This video is pretty long now. I show you it because we are still green. This is still thick, not dropping. It's still going sideways, which is usually a powerful sign. It doesn't mean there can't be dips. You can see, there can be dips, but it's still strong on your larger trend. If the market was weaker, this would be tapering off, right? Let's look at look here. It was strong for a long period of time, but when the market started to die, you can see that it lost all of its strength. See here. Let me just put this to 100. 150 can be big sometimes, but what I want to show you here is, see here. This is showing you that this bounce was not good. It was unhealthy. Yes, you could have traded that and used this on lower time frames to trade this for a bounce, but it was telling that this was a warning sign. And yes, it was moving up, but look at the bear trend. It captures the entire bear market, right? We do not have that yet. We do not have that. This is very important that this is very still thick and strong. It doesn't mean that we can't go through a choppy phase or whatever, but the market is suggesting that it's not ready to die just yet. When read correctly, this is one of the most powerful tools I've ever seen. Anyway, guys, long video. I didn't mean it to be so long. I knew it wasn't going to be very short, but I want to just finish off on this video here that there's a few things I want to touch on. Two things, okay? Gold first, okay? So when gold had an ETF in 2004, right? Back here, 2004. You can see 2003, maybe memories. I think it was in here, right? This news here, maybe here. But you can see then that there was basically, this is, I'm on 6 months charts. You can see that there was 18 candles of a trend to the upside. 18 candles of a trend to the upside. And then we had that bit of a dip, right? The dip wasn't even that big. Okay, because it came after the financial crisis, so it rose a lot, and then the market then powered higher again, right? So Bitcoin is likely to do something similar. Remember that 16 to the very top, but it's the market was not dead there. You could possibly have an alt season or something, even in those last couple of 6 month candles, right? So if I go back to BTC, I can go to Coinbase now. It doesn't really matter. I'm not going back to the old trend. But we have 6 candles. Sorry, I didn't do that correctly. I thought I said 6. 1, 2, 3, 4, 5, 6. Okay. So there are 6 so far. So it doesn't mean like gold had 18 candles straight up, but there was a couple of candles that were red candles or consolidation before continuing again, right? Maybe I should just do something better than that. There was a red candle, and then we continued higher again. For example, the trend was not over, right? The trend was not over. There was 18 6-month candles in a row, and it just continued and continued and continued higher, okay, into the next financial crisis. After that financial crisis, then there was a dip. Then there was a dip on it. Why would that happen? Well, because there's fear now of inflation. There's fear the stock market's too high. There's fear of the dollar getting devalued and all of the rest. There's fear of war, all of that. Now, when does all that fear usually capitulate? Well, in a stock market crash. So a stock market crash, the likelihood is that there's a chance this could continue. I'm not saying there can't be dips, but the likelihood is that the actual trend itself should continue until there's a real capitulation. That real capitulation in safe assets like gold and like Bitcoin, often in past histories has either happened in parabolic moves or happens on economic events like a stock market crash. So in a stock market crash, everybody starts selling their stocks and their and buying with their money into safe assets like Bitcoin, in theory. But then after that, when people think the stock market has bottomed, all that money comes back out of Bitcoin back into the stock market, right? So that is something to consider in our analysis for looking for a real top in this trend, okay? A real top. And it is to consider the macro side of things, and that would be, well, even into a stock market crash, Bitcoin could potentially hold up. But gold did drop 35% in a stock market crash. Maybe that might mean if stock market crashes, Bitcoin could drop 50%, right? But after the 50%, after the 35% in gold, it rocketed higher again, okay? Bitcoin is likely to do something similar. But that is just a correction. It's not a real turn in the trend. Now, I say that with a caveat. All of that is suggesting that the trend is still strong and that we should continue higher, but we could still have dips. Now, I want to talk about that very quickly in the last few minutes. This is a dangerous area for Bitcoin. This is a very dangerous area for Bitcoin. We need to be watching. There's only 4 days left in this candle, in this 6-month candle. There's a possibility that there could be dips and create a bit of a red candle here, right? We have already had 6 candles in a row. So we need to be watching very carefully on a new 6-month candle, right? If we pop up and flip red and maybe take out the highs and drop back down, we need to be on guard as there could be a larger drop, okay? Is Bitcoin going to have 1, 2, 3, 4, 5? Is it going to have 6 in a row? Well, it's very possible, right? We definitely cannot rule that out with the buy pressure happening at the moment, and the miners are not even selling that much. So there is a chance this is not a red candle, and we can continue higher again, right? That's a real possibility, right? The trend is your friend until proven otherwise. Now, what do we look for? We want to be looking for, just like it did here, just like it did here, just like it did here, and just like it did here. We want to look for that initial sell-off at some point early in the trend and create that wick. From creating that wick, you want to see it pop up and find strength and flip green on the candle and try and run higher, okay? So that is very, very important to be looking out for. I put this video out because we are 4 days away from this new very, very, very important candle because we've already had 5 in a row, 5 green in a row. So stay vigilant. In 4 days' time, we need to watch this like a hawk. We need to watch it, watch the order book, see if there's large sales coming in. There is huge sales right now. I'm going to stop the video on this. There's huge sales right now at 1088. Now, let me just break this down and show you where that is right now to finish this video, because it is very, very, very important. They are large sales. Now, these are your levels here, as you can see, I've marked out on the chart. They are very, very important. Huge sales, especially coming into the end of the quarter. This is real resistance in the market and can push the price down. We need to figure out, are these whales about to dump the market coming into a new 6-month candle? This is your warning point. This is your point to be very, very careful about. The truth is, if you were trying to take a trade based off these, you could even average in a little bit and have your stop above there. You know, the top of those sales is 1.33% away. You know, if you were a prevalent shorter and you wanted to hedge your long position, you could start to put on some risk right now, looking to short into these large orders, front running them, just like we talked about at the very start of this video. People will be watching these orders and they may even front run them. Okay, price has now popped up above this previous high and is now failing so far. It may still go back up and we may still run up into these orders, but we need to see if this is going to hold and maybe even push the price down. If we break these orders, well then price is free to continue higher again, but it's not going to be easy to break these orders unless they get lifted, you know, unless they're spoofing the market and then people pull their orders. That is always a possibility. Anyway, guys, that's it for the video. Hope you enjoyed the deep dive. Come on in, check us out in our live trading room. You can try out our indicators. We have a group of fantastic people, members on there. We have very, very powerful trading tools and a very powerful education section. Don't forget to like and subscribe. And if you have any comments, please comment below. Thanks for watching, guys. Have a great day.